Everyone, Dave Landry here. We're trading Simplified. This is the part of the show where I wasn't gonna do it this week, but I guess I will because for some reason it's shocking to me. We're up to 17 already. Wow, the time is really flying. So what are we talk about? Well, I wanted to get into IPOs, and I'm going to talk a little bit about IPOs as time allows because IPOs have been fairly hot as of late, and I'll walk you through a couple of those trades again as time allows. But one thing I was thinking about doing starting on Monday was I wanted to show you my last 10 or so trades and how that turned up and how they turned out, good, bad, and different. We have a little follow up on the mystery chart. Knock on wood, it worked out really well. Once again, we've been pretty lucky with those mystery charts. So if you're looking for more information on me, or if you want the slides from this presentation, I usually have a lot of material, and I know I'll go through it pretty quickly. So you can go to davelandry.com/StockCharts. Give me a little while to get the slides updated if you're watching this live, but if you are seeing this live, by then I should have the slides updated. If you need to reach me, davelandry.com/contact. And I do take requests, by the way. I know some of you guys have written in some questions, and I'm going to cover one of those this week, but on some of the questions that require a lot of thought, I'll put together presentations, and if there's not enough time in this venue, I'll do them elsewhere. All right, let's talk about the mystery chart for this week. Now, this stock has run up very nicely, and then it has pulled back, and this is an IPO, and that's why you can see the chart has only so many bars on it. With IPOs, I'm slightly more lenient in two ways. One, for the normal type of core methodology that I follow, which is mostly pullbacks related. I'm a little bit more lenient there as far as looking for perfection. And I also do play a breakout characteristic. So this stock should look familiar, and I'm going to reveal this stock by the end of the show. If I remember, I'll try to remember best I can. But if I should forget for some reason, if you go in and watch, I believe it was last week's show, and you could see where I was explaining the IPO pattern we bought on this breakout and then took partial profits. I say we because it was a trade announced to my Facebook group and then got stopped out for the remainder. And I call this the better than a poke in the eye trade. At least you get a little money in your account. All right, let's follow up on last week's or week before's mystery chart, QCUE. We had a nice accelerating trend in this particular stock, and then it began to pull back. Also in that trend, notice that the move higher was very persistent, meaning the stock tended to go up day after day after day. And you could see that in that acceleration was also persistent. So persistency looks like this. Just imagine drawing, or actually draw a line through as many bars as possible. And if you could intersect nearly all of them, then it's a very persistent trend. And persistency is a very powerful concept. I actually have a pattern I call persistent pullbacks. And at some point in time, maybe when the market cools off a little bit, I'll spend some time going through some of these patterns, such as persistent pullbacks. But if you didn't look for anything in charts, I would suggest you at least look for persistency, and that's going to really help you out. I'm kind of blown away at how great it can be. Now, in this pullback, we had a little bit of a TKO type of move, so I call it TKO-ish. One thing I sort of do when I'm looking at charts is I kind of eyeball the last several bars and put them together, or sometimes look at a 2-day chart or a 3-day chart. And if you do that, this little pullback will actually look like a TKO, which we've talked about quite a bit. So here were the parameters that I put in a trading service, 471 shares at 1625. That's based on a hypothetical 100K account. I do, for purposes of these presentations and my webinars, I do maintain an account roughly that size, so I can actually show you that these trades are truly being taken. And I do show you everything ahead of time. There's a lot of disingenuous people out there. I don't want to go off on a tangent, but they'll do the same thing in maybe 2 different accounts, and they'll show one account that worked and say, hey, look how smart I am. Anyway, based on those parameters, we had an entry here, protector stop down here, an initial profit target, or IPT, up at this level here, and this is what happened. Again, knock on wood. Now, we came within 1 cent of that initial profit target. When that happens, do not split hairs. Make sure you take partial profits, and that's something that I preach. And I did put out a post to tell everybody to take partial profits. But I do track things if you happen to be looking at my service spreadsheet, which you can take a look at that at davelandry.com/archives. That is actually tracked hypothetically and mechanically, even though I might occasionally use some real fills just to make sure that it's as realistic as possible. So there's the buy down there. You can see I bought a little bit more than 479 shares. I round up usually. In this particular case, the count was a little bit bigger. So I ended up with 600 shares. There's your buy there. And I'm getting a lot of questions on entry. So I want to take, this is a great example to explain why I enter where I do. You want to make sure that your entry is far away so you don't get triggered in on noise alone, but it can't be so far away that you no longer catch that reversion to the mean type of move. So if your entry is too close, a lot of times you're going to get triggered on noise alone. That's bad. If your entry is too far away, you're going to miss the reversion to the mean move. And I'm going to walk you through what that is right here. So you can see at the bottom, as a general statement, markets tend to oscillate between overbought and oversold. Now, we don't want to just buy overbought or sell oversold. But if we have a nice trend and the market becomes oversold, there's a good chance we're going to get a reversion to the mean move out. We don't try to catch that falling knife, so to speak, but when the market turns back up via an entry, we'll go ahead and get long. Now, in this particular case, if the entry was way up there, by the time the stock gets all the way up there, it's already back to overbought and it's too late and you might have missed the whole move. Now, Q has backed off a little bit since it's neared that initial profit target and we've taken profits. So that would kind of be a good example because the initial profit target was up there right around this high level that I had. So it's kind of a Goldilocks scenario. If it's too high, you give up all that reversion to the mean move. And then, of course, you risk being stopped in or triggered in, I should say, at the exact high. I use the word stopped in sometimes because I actually will put in a hard stop on these orders. For instance, on the mystery chart, which I guess I can go ahead and give you now, it's SPT. I actually put in a hard order on that at 2025 for my entry and got stopped in right before the show. In a case like this, if the entry is right above the high, sometimes that's just too low. The exception would be if you had something like a TKO with a very, very, very wide range bar down, and then you had a close close to the lows, and then the market begins to rally back. If it rallies all the way back to the entry, then maybe you have a bona fide reversal on your hand. So this is what I have illustrated at the bottom of this chart is what something that would be called like a textbook TKO. You've got a nice trend and you've got this big old wide range knockout bar to the downside, close on a low, then yes, in that case, you can put an entry right above the high, stop right below the low, and then your other calculations, such as your initial profit target, are automatically calculated for you. And go in and watch prior shows on that, and that'll make a lot of sense. We did a show just on TKOs, one of the early shows. And if you request the slides, I have all 17 shows, or I will have all 17 shows in there. So you can go in and pick and choose which ones you want to watch, and you'll know where those shows are. So this is where the entry was, and I'm going to say in this particular case, this entry was what I would say just right. Obviously, we'd always want to be in earlier when it works, and you want to avoid them when they don't. So that's why you need to decide on where you're going to get in and go from there. We were chit-chatting about trading before we got started today, and somebody was saying, well, you know, I wish I'd hung on to more of this. And it's like, well, you just have to make your decisions and live with them. And I know that's easier said than done. So getting back to the entries, if it's too high, you're going to give up, again, too much of the reversion to the mean move. And then there's a chance you could always end up entering at the exact high he tried to say. Let me get some water, get my tongue unstuck. And if it's too low, you can all but guarantee you're going to get triggered on noise alone. All right, let's take a look at my last 10 trades or so, and let's see how many of these we can get through. Now, this QTT, I'm going to spend a little time on this because it had a lot of things going for it. And it's a little bit more advanced than some of the things that I do. But what I like about this one is it was bottoming out for a long, long time. And it came off of very, very high levels. And I call this my Phoenix strategy because a lot of times these stocks will go down in base for weeks, months, and sometimes even years, and then rise from the ashes. And I kind of like that aspect on this particular stock. Those who are familiar with the Cup and Handle, which was popularized by William O'Neill. But you can actually go back and look at books on the market written 100 years ago with Schaubacher and people like that, Edwards and McGee, and you'll see they talked about cups way back then too. But we'll give Mr. O'Neill some credit on that. This was also a bow tie. In a case like this, the stock ran up like 100% over a fairly short period of time. So I'm not as concerned about the bow tie being perfect, but it was a bow tie. It was a little, what I would call sloppy, because it took 5 or 6 days to actually cross over versus 3 or 4 days. And those bow ties are 10 simple, 20 exponential, and 30 exponential moving averages. I've experimented with quite a few moving averages over the years, and I found that these have a really cool characteristic to them. And you can see here's our bow tie down here. Again, it's a little bit sloppy, but the market was in a really good trend, a really good persistent trend, or stock, I should say. So I thought it was worth going after, especially since it was a big picture cup and handle and also had pulled back as a setup. If you look to the left here, this bow tie down, which signaled a major top in this particular stock, was a little bit tighter than the previous one. Or than the one we're just looking at right here. So that's a tight versus a kind of what I would call a sloppy type of bow tie. There were a few bow ties in between, but notice that there was actually no triggers if you would have put your entry at the proper spot. So you would have avoided a few losing trades. Now, just to show you that, I did show this stock ahead of time. This was my lists, my personal watch list, which I also publish this is for clients. So on January 31st, and my goal with this show especially, but other shows too, is to never show you anything that I didn't first talk about publicly. So I bought 2,000 shares at 450. And then at that same time, I was thinking it'd be fun to do like an S&G trade, meaning kind of a throwaway trade. And I know you can't get a little bit pregnant and you have to be careful. But in a case like this, I just think a major bottom is in place. So I was looking at these February calls, and they were asking like 5 cents, or I forget what they were asking, but I just wanted to see if I could go in and put the lowest amount possible. And they sold them to me, which I thought was kind of interesting, for 5 cents each. And then I later found out, as you will see, this was because of a mistake I was making with the brokerage, or glitch in the brokerage, where I couldn't get that order below 5 cents. I was trying to get them as cheap as possible. And again, this is what I call an S&G trade. If it doesn't work out, so what? And if it does work out, it's going to be spectacular. And then around the same time I triggered in, I also bought some 5s, and I ended up with 18 of those. I was going for 20, and I only ended up with 18 filled by the time the market began to move and everything. So here's the S&G trade, which cost me $50 plus a little money for commissions. Here was the actual buy of the 2,000 shares, and then this was the call trade right here. Now, as you'll see in 1 second, as it began to rally, we took partial profits. And then at that particular time, I sold 8 of those calls. I was trying to get 20, but only ended up with 18. So I decided that I wanted to keep 10, but I wanted to sell enough to roughly cover the cost of my option position. Now, options are a can of worms, and I don't want to get too far into them because we need a lot of trouble talking about them. And it's very hard to have anyone agree on what should or should not be done with options. But just be careful with them is the bottom line on those. But the way I like to trade options, other than the occasional S&G trade, which I probably shouldn't have showed you that, but I want to show you everything that I'm doing here, or as much as possible, certainly. But anyway, what I try to do with options is I like to hit a double. I mean, obviously we always hit a double, but when they do double in price, I automatically sell half, and that way the option position pays for itself. And then you could see this is another little S&G trade that I did down here. I was actually trying to pick up 100 of these, and I only ended up filling on 9 at 1 cent. My thinking was I could end up with a 10,000 or controlling 10,000 shares should this stock be the mother of all bottoms. And again, this is something that you could kind of sweep under the rug. The overall trade did fairly well so far, knock on wood. So $100 here or so on the option trades for S&G type trades really isn't going to hurt me and has really big payoff. Okay, we're going to take a quick break, and when we get back, I'm going to continue talking about QTT, and I'm going to walk you through some other good trades and some not so good trades. When we left off, I was talking about QTT. So I've zoomed it in here. I want to show you where I took the initial partial profits. I took partial profits on this one right here for a swing trade. And then at the same time, I also sold off half, actually not quite half. I sold off 8 out of 18 of those options. Now, keep in mind, what I'm showing you here is on a model account. I am doing something very similar in other accounts, but the reason I'm showing you this one is it's right around the size of the account that I use in my trading service for a hypothetical 100K, although this one does have real money in it, and these are real trades. Now, once you get that swing trade off, the beauty is you're free rolling. I borrowed that term from Charlie Kirk when he was looking at my money management. And in this particular case, so we got a free position, barring overnight gaps. If this thing goes back to 450, then so what? We made money on it. I know. Relax and enjoy, right? Haha. But that's the idea, to establish these free positions. And if you're watching my weekly presentations, the weekend charts, I've been hung up on this, working to have the short-term trading pay for the longer-term trading. And believe me, that is really the secret to trading. Short-term trading doesn't make them enough, and there's also some risk. You're going to come in one day, if you're swing trading, I can all but guarantee it, and one of the stocks you're long is going to lose half of its value. And it's going to take you a long time to make that up. But if you're positioning yourself for both swing trades and longer-term trades, like the QTT, for example, or the CUE, if that turns into a long-term uptrend, you're going to make a lot of money on that. So here's ARQT, a recent IPO that I triggered into. And if you look at my Facebook post, you can see that we talked about it, and we talked about our parameters and kind of kicked it around a little bit. And that's the fun thing about having a group. Not that I'm the grand poobah, so it's good to have other people chime in. Now, with the IPOs, as I've said before, you don't want to trade them till at earliest day 5. I do have an IPO presentation out there on StockCharts. It's separate from Trading Simplified, but I will come back to this as soon as time allows and talk about IPOs a lot more. But the main thing to know is you don't want to trade them until at least the close of day 5. And my rule there would be that it has to close at a new closing high, and the high for the week should not be set on day 1. Now, we'll come back to that if time allows. But in this particular case, I was going to use a 5-point risk and initial profit target. Remember, the risk, whatever you're risking, is the same as your initial profit target, and that's where we take off half. So it was a buy on the close. Stop is down here, and the initial profit target is 30.76 on ARQT. And there you can see there's the actual buy. Notice that this is a market on close strategy. So I bought in with 10 seconds left to the close. As I've said before, it can be a bit of a leap of faith. It's kind of scary sometimes, but that's the way the pattern works. So that's what the pattern calls for. So here's another one, ONEM. And these aren't working out swimmingly just yet or fantastic just yet. And I want to show you these things as they're triggering in, so you don't think that I'm just going to show you everything in hindsight. So this one will be fun to watch. Day 1, day 2, day 3, day 4, day 5. So the buy was on the close in this particular day, 400 shares. Again, risking, I think, 5 points on this position. And you can see we bought pretty close to the close on that. Yeah, 5 points risk and 5 points initial profit target. So the stop is down here, and then the IPT is up there at 30 and change, or right around 30 even. Now, as I've said before, if day one sets a high for the week, with this particular pattern of close has to also be above that high. But you can see day two set the high for the week, okay? Or certainly was exceeding day one, so we don't have to worry about that day one rule. Now, here is an opening gap reversal that I played. Ideally, you want to play opening gap reversals in the direction of the trend, but every now and then a market gets very, very overbought, and you're looking to capture an intraday pop when that market begins to reverse. As I said before, I spent a lot of time talking about these opening gap reversals, but the bottom line is it's not my bread and butter, but it's a way to occasionally pick up a little bit of money trading. And sometimes you get like a perfect example. And I think I've showed a couple, I think it was, I'm trying to think of the name of the symbol. It escapes me at the moment. But if you go in and watch prior shows, you'll see a couple of those textbook ones where we had nice trends followed by really nice pullbacks. And then we got long on these opening gap reversals. So this is SOXX. And my thought here would be that it would go back up past its prior close and beyond. And initially, it looked pretty good. And so what I did was I put an initial profit target and an automated trailing stop. And unfortunately, by the end of the day, I got stopped out for a very modest loss, but a loss nonetheless. So it happens. Actually, a little bit more than a modest loss. We'll take a look at the spreadsheet here in just 1 second. But it happens, and I've got it in quotes because it's actually spelled with a silent SH. So same sort of trade, same day with TECS. Again, we're looking to catch just an intraday reversal in the market. And then you can see that by the close, we just exited because we weren't stopped out. Now, I did have an extra 10 shares that were left over from a trade a long time ago that didn't get filled. And so I went ahead and just flipped it out with this trade. So in case you're wondering why it's 2,210 shares there. Now, VIR, I tried to get a little cute with this one. This one I had bought way back around 17, if memory serves, and it ran up like 10 points in a very short period of time. Then I got stopped out after taking partial profits. And I tried to get a little cute here because I might have got sucked in a little bit to the hype of the coronavirus, the truth be told, even though I tell you to ignore the news. And I was looking to get back in, and I was looking to play that opening gap reversal, but as you can see, that just failed miserably, and then ended up stopping out, I believe, yesterday on this one at 1826. The old hedge fund adage comes to mind: he who fights and runs away lives to fight another day. So VERU, another stock, as you can see here, was on my Landry list going back to the end of January, or the service for the end of January, I should say. So I was looking at 2,000 shares right in here. And then so far, let's see where we are with all this. So where does all this trading leave us? Well, if you add everything up I just showed you, and we'll take a look at the Q in just 1 second, it's 1542. So we did have some losses in there. It happens. And then this week, the opening gap reversals really didn't make that much. I think you go back last week or so, and we actually lost $1,000 week before. We did really well with them. So you have to be really careful with those and keep your risk in line. But all the trading we just looked at, 1542, roughly my last 10, 11, 12 trades there. And then the Q, which was the mystery chart that we showed way back, probably on the 14th. If you go back and look at shows around then, or get the slides and look at the index once you see those slides. And you'll see when I first mentioned it, just so you can follow along at home and see that this is not in hindsight. And I know I'm going to quit saying that, but I just want to make it abundantly clear. Anyway, that's where I ended up selling out at a swing trade profit, 2.5 points or 2 points and change. And that was 960. I was looking for at least $1,000 or 1% roughly. And then right now there's $765 open. And if you add those up, that's $17.25 in that open trade. So I just want to show you that open trade especially since I just mentioned it early in the presentation. That's where we are now. If we get stopped out, I know I'll probably drop an F-bomb, but shrug your shoulders and scream next, and then be happy that you put money in your account. Many times people will make money on a swing trade, stop out, and then they'll complain to me that they gave that money up. And I just tell them, send me the money that you made and keep enough out to go get a massage, go center yourself. And that way you can just forget that it never happened. And 20 something years, I guess 30 now, no one has ever sent me any money from those trades. So be happy when the market gives you something, even though it's not as much as you wanted. And I'm kind of backing into psychology accidentally here. Right before we're going live today, I was thinking some random thoughts on all this. And one is dance like no one is watching, but trade like someone is. And the reason I'm saying that is when I am nearing that initial profit target and the stock just can't seem to get there, I go ahead and take profits. If I have an entry on a stock, I work hard to make sure I put in a stop entry, especially if I'm doing something like a show like I am today. And if, above all, I'm tempted to do something that's really, really crazy, not just like a S&G options trade where I know my entire risk right off and I could just write it off. But something like catching a falling knife or buying because something is low, then knowing that I'm going to show you my recent trades or others my recent trades and discuss these things, it's like I think you should really trade like somebody is watching you. So why would you take that risky trade that is outside of your methodology? Why would you be tempted to do the wrong thing? So pretend like somebody's watching you. Accountability is something that I get into a lot. And I think that it's very important. If you're willing to share your trades with someone else or discuss them in a group like we do, I think that could be a godsend. I think that's probably one of the best things I've done in my career was start that group. Now, notice that there was a lot of red in the spreadsheet, even though we were profitable overall, knock on wood, of course. The bottom line there is you really need to follow the plan. And yes, you will spend a lot of time less wealthy as a trend trader. A lot of time will be spent giving up open profits. And then sometimes you'll just be in a flat out drawdown. You'll have losses. Learning to live with this is really tough. Now, I think taking partial profits is crucial, and you just have to make that decision and live with it. So you want to take partial profits along the way. If Q or QTT implodes, which we've already taken partial profits on, I'm, or we're, for those who took the trade with me, are profitable overnight. And that's barring overnight gaps. Now, just real quick with these IPOs, again, with the day one high, if that sets a high for the first week, if that's the highest bar, then the pattern, you have to get in above that high. But if day two or any subsequent day between now and day four, I should say, is higher, then you no longer have to be above that high. So you just go off the highest close, and then you can get in as early as the close on day 5, like we did in this ONEM. And I'm going to have a lot more to say about IPOs later on. You can see there's also Landry light here. So we'll revisit this example in upcoming weeks. Okay, if you're looking to reach me once again, my contact info, well, first of all, thanks everybody for watching, but contact info is www.davelandry.com/contact or www.davelandry.com/StockCharts. Again, thanks for watching, and I hope to see all you guys and girls.